Good evening and welcome. You're watching The Big Story on NDTV Profit and I'm Nupur Talwar Suri. Well, the IPO frenzy is pushing more investors to test their luck. But despite their enthusiasm, most applicants miss out on their chances of an allotment. Recently, we saw this with the Bajaj Housing Finance's IPO, wherein only a few managed to secure the shares despite the offer being oversubscribed more than 60 times. Now, the IPO allotment process remains a matter of luck. But what are the steps that can be taken to boost the chances of getting an IPO allotment? What are the common mistakes that can be avoided? That's what we're going to be discussing today on The Big Story. And in fact, the 3 big questions that we are asking today are: how can you legally game the system to ensure IPO allotment? The next question: what common mistakes do investors make that lead to rejections in the IPO process? And is it possible for some applicants to get IPO allotments fraudulently? In fact, to answer these questions, we are now joined by Pranav Haldia. He's the Managing Director of Prime Database Group. Also joining us right now is Avinash Gorakshakar, Director of the Research Profit March Securities. Good evening, gentlemen. Thank you very much for joining us on The Big Story.
Thank you for having me.
Well, Avinash, to you first. Now, Avinash, we see, this huge rush for IPOs, and several of these have been oversubscribed. For instance, just recently, we saw Bajaj Housing Finance was oversubscribed multiple times. Now, what do you make of this frenzy for IPOs?
Yeah, first of all, Nupur, good evening and thank you for inviting me. I think whenever you find a public issue which is going to be heavily oversubscribed, like what happened in the case of Bajaj Housing, I think many investors first make the mistake of applying in larger kind of values or maybe in a bigger kind of lot size. So I think in such kind of IPOs, the first step which I think we advise our clients is to actually put a single application for a single PAN card account number, because that increases the potential. And I think within the family you can have multiple accounts with different PAN cards. So I think as far as possible, try to apply in different names with or participants having their own demat account, a separate PAN card, because unfortunately if you apply in the same PAN card number bigger applications or several applications, there are chances that the application may get rejected. So that's the first I think lesson which investors should use to actually get a better kind of allotment. And most importantly, I think just to add a little more relevance to the topic of how you can get allotment faster or maybe easier, is to actually buy the promoter or the parent companies. Bajaj Finance had offered a shareholder quota to the investors who wanted to apply in Bajaj Housing. So I think people obviously did not realize that earlier there was a record date for that. So if you buy the parent company share, the chances of allotment are much better.
Absolutely. So those are some of the tips I'm sure people who are watching will be looking at. We'll come to more of those tips in just a bit. But coming to you next, Pranav, when you look at the data that's coming in for the IPO subscription, it's evident that both, the main board as well as the SME board IPOs are getting a lot of attention from retail and other investors. Why is that happening to begin with? Tell us more.
Well, historically, you've seen this, that when the secondary market is, in a bullish trajectory, the primary market follows suit. In fact, just talking about the current financial year, which is 24-25, on an average, IPOs have given 35% listing gain. And this number zooms to 70% for SME IPOs. So, the lure, markets, as we know, run on greed and fear, and the lure of quick money is too hard to miss. And when you see this kind of frenzy, it's always followed by a lot of interest from retail and HNI investors. In fact, just adding a bit more, SEBI came out with a study recently as well, which showed that a majority of individual investors who are actually now applying to IPOs are coming in from a flipping point of view. So no one's really looking at what are the fundamentals of the company, what are the financials of the company, what is the governance of the company, which sector is it in, what product does it do. But investing in literally every IPO, because in a bullish market like this, the chances of listing gains are tremendous, and you can get a good return in a single day. To add to that, just the ease of the application process. From the times when you used to fill out physical forms, need to have a check attached. Now it's a matter of 3 or 4 clicks to apply to an IPO. Neither is your money leaving your account. So it's become extremely simple. And what you're finding is that your average investor is literally applying to every IPO, hoping for some allotment, and in case they get some allotment, they exit on the listing day.
Right, absolutely. Now, any thoughts, Pranav, on how can one essentially maximize one's chances of getting an allotment? Because that's the question that everybody will be asking before the next big IPO.
Well, I think my panelist has already shared his insights, which are, absolutely bang on. As we used to joke that in such times, just find everyone, your wife, daughter, son, neighbor, whoever you can find, and apply in their name. That's the only way to get some kind of allotment at all. In fact, the other aspect to note is that given the change in SEBI rules 3-4 years back, now with the kind of oversubscription that you find, the chances of getting an allotment are any which way slim. Even if you get an allotment, you only get a single lot. So actually, in overall quantum of money, even if there is 100% return on listing, you don't really stand to make that much amount of money. But if you want to increase your chances, then you should apply through multiple applications, and of course that shareholder category is available as well.
Right. Now, Avinash, there have been reports of people actually making a large number of applications. There are some numbers that are doing the rounds on social media that actually seem a bit ridiculous. For instance, there was a report that suggested that people were making up to 18 applications. Now, this obviously, will raise a lot of red flags on the process. And, tell us more as to how is this possible?
I think, I think now the regulator is extremely strict on all this. And I think, you cannot make fraudulent multiple applications. I think, as long as all the members who have applied are part of the family, that is a perfect kind of thing. But if it is a neighbor or maybe it's a friend, typically, it's not possible that you can have a very large amount of multiple accounts. I think, as my co-panelist said, I think you need to have multiple accounts, but you need to have different accounting, PAN card numbers. So I think sometimes it may be possible, but these kind of activities are monitored by SEBI in a very strict manner, and the entire process has become entirely computer driven. So there's hardly any malfunction or any fraudulent activity which is done on the side of the on the merchant banker. I think all the merchant bankers are aware that allotment is a very well laid down process. So I think the scope for fraudulent activities has also reduced considerably. But yes, definitely, if number of multiple applications from the same person, with maybe cross combinations of the first name and the second name are found out, then I think it definitely seems that it's a very well planned, pre-planned kind of strategy, and I think which the regulator will obviously find out. But I think this happens very rarely. I think today, the system is very robust. We find that most of the applications are genuine. And yes, in certain cases, you'll have to obviously look at the fact that some applications may be fraudulent, but, finally, at the end of the day, if there is a genuine kind of PAN card number to the application, then there's nothing which the regulator can do. So I think, you'll have to pick and choose each case as it goes, but I don't think there's any fraudulent activity or, kind of misuse of the system. It's only a matter of, sometimes it's luck that despite putting 20 applications, you might not get a single application, in your favor. So, that's how it works.
Yeah, and also, Avinash, what are the common mistakes, that one can avoid to make sure that there are not any rejections? Because that's something that a lot of new investors will be looking at. And we do see a lot of new investors jumping the IPO bandwagon.
I think, first of all, in one of the solutions, when you asked me, I told you that, you got to buy the shares of the parent company much early. For example, NTPC Green is a very big IPO which is expected to come in. So I think a very simple way to actually get shares in NTPC Green is to buy the NTPC Frontline flagship share. At least buy a minimum quantity, and obviously you could get benefit by way of the shareholders quota, which evidently will be given in this IPO. And the second mistake which a lot of investors do is that they know that the issue is going to be oversubscribed 100 times, 500 times, but they still apply only one application and that too in a bigger quantity. So I think that needs to be avoided. You should put in the minimum amount in every single application and try to put in as many family members with multiple accounts. That increases the chances for you to get an allotment in such kind of IPOs.
Right. Now, Pranav, you were mentioning earlier that the rules have been changed significantly. Now, many people, of course, wonder whether, how the changes, in fact, have benefited people who are applying for IPOs now, or whether, the older system was better, because a lot of people seem to suggest that the newer system is based a lot upon luck.
Well, in my view, I think the process now is more democratic for sure. So the endeavor there from the regulator side was that more number of people are able to get allotment, albeit even a single lot. So earlier, you could be very lucky and get a huge allotment, but not many people were getting allotment. What this current process ensures is that more number of people get an allotment, but the size is, the single lot which is given.
Right. Now, Avinash, what are the trends that you are seeing in terms of, whether people hold on to their allotments or, do they want to make quick gains? Because that is also something that is being highly debated.
No, I think, Nupur, that entirely depends on the risk appetite. There are some people who only are interested in listing gains. So for them, Bajaj Finance, which was offered at 70 rupees, in 2 days, you get 175, 180 rupees is a very sizable gain. But I think, my sense is that, normally in the first few weeks, you get a euphoric price. And after that, the stock starts reacting. Like today, Bajaj Housing saw some mild correction. So I think it's always better to take out your capital, whatever you have invested, and the rest of the shares or quantity of shares can be held on for the longer term, because Bajaj Housing, according to me, is one of those companies which is not going to make a public issue quite frequently. They are well capitalized, so I think you could get a good chance to make a huge gain provided you have a longer term kind of time frame in mind. So I think it all depends on the investment appetite, but 90%, as Pranav said, my co-panelist, is that most of the people come in for only flipping activity, like buy the stock in the IPO, sell it in the market, and again rotate the same capital in some other IPO. So that's what actually happens for IPOs. So I think that's the trend which you have seen in most of the retail investors.
Right, Pranav, any thoughts on that? Is that a trend that you are seeing in retail investors, wanting to make sure that they get the gains of the listing process? Because, over the next few weeks, we do have a lot of them lined up.
Well, that was something which we always knew from an anecdotal point of view, but I think the SEBI report which has come out has, absolutely nailed it and put it, absolutely clarified in terms of what's really happening in the IPO market. And I think they're very clear that 3 out of 4 retail investors do exit, the IPO within a week of listing. Look, like my co-panelist said, that as an investor, you need to be very clear about what your strategy is. In a bullish market like the one that we have right now, the chances of listing gains are high, and you can say there's absolutely nothing illegal or wrong about, investing into an IPO from a listing gain point of view. But then you should be very clear that in case that even if the stock lists at a discount, you should exit, because you've not done any kind of analysis in terms of, what the company is doing, what are the fundamentals, how are the financials, how is it, performing for the last 3-4 years, who are the board of directors, who are the promoters. So irrespective of whether it lists at a premium or at a discount, you should exit. The other way to, of course, invest into an IPO is the harder way, which is to actually study the DRHP, understand the company, and say that, look, I'm going to park my money in this company for the last 3 years or 5 years. In fact, I was just looking at the data yesterday, and it's astounding that the IPOs which have listed in 2023-24, which was last year, if I look at the average return of those IPOs, it's an astounding 83%. The IPOs which got listed in 2022-23, which is the year before last, their current return is 118%. So what you're also finding is that apart from just the listing pop, IPOs are delivering over the longer term as well. So it doesn't necessarily, this is something which investors may want to consider, that it's not just about the listing gain. IPOs are delivering good value over the longer term. And I think one additional point which I would like to make is that, the quality of companies that you're now seeing coming to the IPO market is far superior than what you had in the past. And I think the regulator also needs to be commended significantly for this. But a lot of these companies are now, large in scale, have had, prior investors in the form of private equity and venture capital. So you are assured that, some due diligence has already taken place on the company. Some good governance practices would already be in place. So I think, on the quality of the companies, there is not as much of a concern which is there. Of course, the valuation is something which needs to be looked at, whether it's with existing listed peers or, in case of some of the newer technology companies which are coming, which actually don't have a peer, seeing how institutional investors are behaving, how are the anchor investors behaving, and then basing your decision on that basis. That's from a longer term perspective.
Right, Avinash, what we have seen is, as Pranav was also pointing out, that investor education is something that we severely lack. There are people coming in specifically, when I say investor education, I'm referring to the SME board IPOs. We've had, people going in for these IPOs to make a quick buck, but they've also lost a lot of money there. So what is your advice to first-time investors? What is it that they need to keep in mind?
No, I think, clearly you need to understand what is the business model of the company, what is the promoter bandwidth, and most importantly, what is the kind of scalability in that business. There are many good SME companies which have come in, and now, a lot of marquee investors, have started, coming as anchor investors. So, there's a lot of serious money which has come in. In fact, now the market cap of these SME companies is more than 1 lakh of crores. So, it's serious money which is being made. But yes, I think investors should be very careful about what businesses they are betting upon, what is the profile of the promoters, and most importantly, is the business scalable? Recently, just to give some facts, a 12 crore IPO got a response of 4,800 crores, in the bidding process, and the company did not even have a profit of 2 crores. So, these kind of IPOs actually spoil the mood in the SME market. People think that everything is, wrong in the SME market. That's not the case. So, I think such kind of things will keep on happening. But I think we need to have proper due diligence on the part of the merchant bankers. And obviously, the regulator is doing a great job. But finally, the investor should know what business they are betting on.
Right, absolutely. Pranav, as well as Avinash, thank you very much, both of you, for taking out the time to join us on The Big Story.
Thank you.
All right. So as both of them said, investors do need to be careful. Now, it is not just IPOs, but in fact, ever since COVID has hit, the financial landscape has seen a surprising shift. Now, it's no longer dominated by just the metros. The North and the East have been leading the charge in adding more investors. In fact, the number of North Indian investors on the National Stock Exchange has now skyrocketed, surging over 4 times to 35.7 million since FY20. Not far behind is the East, driven by the northeastern states. Odisha and West Bengal has nearly quadrupled its base, adding 8.9 million investors over the same period. Meanwhile, the West, that is home to the financial hubs of Mumbai and Gujarat, saw a more modest threefold rise to 30 million. Down south, the investor base has more than doubled, now sitting at 20 million. Now, rising incomes, better internet access and Aadhaar facilities are helping make the stock market participation more accessible to everyone, no longer making it the playground of just the metro elites.
According to the National Stock Exchange, the number of registered investors in North India, especially since the last 4 years, have quadrupled. And I am outside the Shivnadar University here in Greater Noida with a few of the students who themselves are registered investors. So guys, you can just start by telling me your name and your age.
I'm Shivansh, I'm 22.
I'm Pranav, I'm 21.
I'm Devansh, I'm 21.
I'm Devansh, I'm 21.
I'm Ayush, I'm 20.
So I'll start off with you guys. I'll just ask you, how did you start investing and when did you start investing?
Okay, I'm very new to investing. I only made my first investment last month. and I'm using one of the online brokerage platforms.
Right. So how did you come across like the investing part, and who introduced you to it?
My friend did.
In anyone in your family or your friends in your inner circle that also invests?
Most of my friends do, and my elder sister also does.
Okay, right. So you tell me.
So I got into investing a few years ago, around like in the COVID time, and my father was the one who was interested in the stock market, so that's how I got into investing.
How long have you been investing?
I've been investing since 2020, and like in 2021 I made my own Demat account since I was an adult at that point.
Anyone in your family or your friends that also invests?
Yeah, my father is a keen investor, and he's very active in tracking the stock markets.
So any particular investment strategies or any other like in basic patterns that you follow when you're investing?
So basically, I mostly used to look at intraday trading. So I used to just since there was a lack of knowledge, so I didn't used to know what to do at the start. But then I started following some online, and my dad used to mentor me. So basically, I just did whatever he taught me, basically.
Right. So how long have you been investing?
I started investing in 2021 after the COVID recovery happened, so I couldn't capitalize on it. But yeah, I started investing around.
So any particular investment strategies that you follow?
Mostly just I look at the fundamentals of a company and I buy and hold. I don't buy stocks that I don't want to hold for for less than a year.
So any particular websites or platforms that you follow for tips as well?
Nothing for tips, but for my research, I use Screener, Trendline, and Value Picker.
So any family and friends for you as well that invest?
Not really. I mean, my family made some mistakes. That's why I got into the market, and I wanted to correct them. That's why, yeah.
So how long have you been investing?
I've started investing recently, only like 5 or 6 months ago.
So any particular patterns or investment strategies that you follow?
I usually buy and hold. I hold the stocks that I buy. I use Screener and TradingView for like my fundamentals. I look at the technical. I do the technical analysis of the stock and then look at the fundamentals and then decide on if I'm going to buy or not.
So any family or friends that in your circle that invest?
My brother does, and my uncle too. So they mentor me and tell me, like, I get my stock tips from them too.
So again, any particular platforms that you follow for tips or any like patterns?
Nothing for tips, but I use TradingView and Screener for like analyzing the stocks. Yeah.
And finally, to you now, how long have you been investing? Same questions.
I've been investing for a little less than 3 years now, so I started as soon as I turned 18. I don't have a strategy per se. I believe in investing in stocks that I believe fundamentally in. So I'll buy stocks that I can hold for about 10, 20 years. And if I like the company, I'll invest with discipline every month, a certain amount. My father invests, so I learned a lot from him. And about tips, I don't really believe in tips. So I just look at fundamentals. I use Screener, I'll use Ticker Tape or Money Control for news, and that's probably it.
So there you can see the students from this university that have been active investors and some of the answers that they have given. With camera person Arun Singh Negi, this is Sriram Ganesh for NDTV.
Well, that's all we had time for in this edition of The Big Story. Thank you very much for joining in, and do stay with us on NDTV Profit for more news.